Alright guys, welcome to the edition where we really spend time to talk about the charts. Remember I told you that the next class will be very intensive. So we've talked about all the basics of Forex, so there are some questions I don't expect you to ask me. I'll try as much as possible to make this lesson not more than 30 minutes, not more than 20 minutes instead, so that we can move to the next subject as fast as possible, right? So when you want to trade, we have a very general platform where we all trade from to study the charts, especially if you trade currency pair. It is called tradingview.com. Okay, let me bring out my, what's it called now? Let me bring out my Microsoft Word so I can type some things for you to see. Okay, we have a website where we trade. It is called tradingview.com. Okay, when you type that into your search button, it will take you to a place that looks like this, where you will be able to open an account, and then definitely they will direct you to the Forex charts where you see the market real time. It's the most flexible website where we place trades, right? Okay, so first thing you do when you open a chart, I've taught you quotes. So when you open this watch list, what you will see is these are some of the pairs that I trade. Okay, Euro JPY, that's European dollar and Japanese yen, GBP JPY, British pounds and Japanese yen, USD CAD, that's US dollar against Canadian dollar and all those things. AUD CHF is Australian dollar and Swiss francs. Okay. Don't mind my computer. And so on and so forth like that. So let's just use a very common one, GBP USD as our list for our lesson. Okay. If you look at my chart, you see that I drew some crazy lines. So I'll just delete everything. I want to teach you how to read the charts. Okay, I want to teach you how to read the charts so that when you open it, you are not confused. You know what you're looking at, because this is how they all look like. So I'm going to go ahead right now and delete all my lines. Okay, I'm going to go ahead right now and delete all lines, all the lines on my chart, everything as far as my eyes can see. Let me go to the monthly time frame. Okay, delete everything. I don't want you to be confused. Okay, so when you open the chart, this is what you see. You just see a bunch of lines, like candles dropping up, going up and down. You know, you don't even know what it means. So this is how we illustrate price in Forex. All these things you are seeing, like candles, they are price action. They are the way the market, the price moves. And as you can see, I actually made my own to be green and red, telling me that if the price is dropping, it should be in red, while if the price is going up, it should be in green, just to make me feel good. Sometimes I can change it to black and white. When it's going up, let it be white. When it's coming down, let it be, let it be black. Whatever color suits you, you can actually do that. You can change it to any color under your settings, right? You can see that. You can change it to any color. But for now, let's just go ahead into what we are doing, what we are here for. So when you open the charts, the first thing you want to look out for is, where is this market going to? I've taught you before that the market moves in 3 directions. It either goes up, goes down, or it goes sideways like this, straight. So as you can see, the market has been doing some of that. It goes down, goes back up, goes down, goes 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 far up, comes far down, goes up a little bit, like that. But if you observe something in the overall direction, you will discover that the market is going down. from the inception of GBP USD, when the pair started trading in 1971, you can see how long Forex has been. Just a few years after our independence as a country, right? Forex has been in existence. So the market is on a downtrend. So what does that tell you? That pounds has been dropping against dollar. It has never had strength above dollar over the years. Dollar has always been strong because this is GBP USD. Remember I told you about the pair. So this pair that we're looking at now is telling me that against dollar, pounds is weak because GBP is the first one and it's the one going down. So that means overall, the dollar is stronger than the pounds in the Forex market. I don't know what the exchanger is telling you. Sometimes the rate of exchange can differ. Pounds might be a little bit higher than dollar, but dollar is stronger. Dollar is the world's most known currency, right? So first thing you look out for is the direction of the market. That's number one. I don't want to go too much details into my strategy, but one thing I assure you is that I'll give you as much as I can. So another thing you look out for is patterns, chart patterns. I've told you I'm going to rush this course, but I'm going to make it as detailed as possible. When you open the chart and you've gone to maybe monthly or weekly time frame and you've seen the overall direction of the market, there are patterns we look out for to trade. Number one pattern, Number one pattern is double top, like I told you about. Double top, double bottom, trend line, support and resistance. Only these things I'm telling you now are strategies you can use to trade forever. Support and resistance, right? Support and resistance. We have head and shoulder. So we'll just try to look at all this from the charts so that you know how to take your trades. And before I forget, I'm going to do a crash course because I don't want to waste time at all. We have three types of traders. Maybe I'll cut the videos into sections. We have three types of traders. We have scalpers, right? Let me zoom this in so you see it clearly. Okay, we have scalpers, we have day traders, and we have swing traders. There are those they call position traders, but I still see them as swing traders. So a scalper is somebody that opens a trade in a lower time frame, maybe 1 minute, 5 minutes, just to pick some few pips from the market, and then you are off. Just to pick a few pips from the market, and then you are off, right? Just to pick a few pips from the market. So they only use 1 minute and 5 minutes time frame for their trades. Overall, they use maybe 4 hours to get their direction and everything, to get their bias. But basically, they trade on the 4 hours, on the 5 minutes and the 1 minute. While day traders trade on 15 minutes, basically, and 30 minutes, and some even go as far as 1 hour at most. 1 hour. So they use the daily and the 4 hours time frame for their entry criteria to study the chart. While swing traders, which I am, swing trading teaches you patience. Swing trading gives you room and time to do other things while your trade plays out. There'll be pullbacks, but as long as you're certain of the direction of the market, I will advise you as a swing trader, stop looking at your charts every time. Just place your trade and leave it to run, okay? Just forget about it. As long as you're sure and you know that your stop loss is something that even if it gets hit, doesn't bother you, right? So swing traders are those that hold trade for days. Hold trades for days. You can jot it down. For months. Okay, days or weeks. Okay. Then position trader holds trades for months, even years. Okay, so that's just the summary. So as a swing trader, your entry, definitely you start from monthly. You have to start from monthly and analyze down to 4 hours. Then your entry will be 4 hours, right? Not like the rest that use small time frames. And one of the advantages of being a swing trader, I'm advocating for swing trading because I've tested everything and I've seen that swing trading is the most rewarding, is the most effective. Why do I say that? Analysis on higher time frame plays out faster. So when you make your analysis on higher time frame, okay, it's stronger. A bullish engulfing candle on 4 hours is stronger than a bullish engulfing candle on 5 minutes. The one of 5 minutes can be invalidated very easily because it's not a strong time frame. A bullish engulfing candle on daily time frame, a bullish engulfing candle on weekly time frame is crazy. You can bank on it because it's a strong time frame and you can ride on it. Okay, so being a swing trader, there's more room for confidence because of the way the market respects higher time frames, right? So let's go back to what we're talking about. These are some of the simple strategies that you find everywhere on YouTube. There's no need to hide it from you. Okay, so let's look for some of these things on our charts. When you open your charts, you already determine the direction of the market from the higher time frame, depending on the kind of trader you are. So let's go to daily time frame. I've switched to daily time frame. What's the difference between all these time frames that we keep talking about? Time frame simply means these candles that you see. How long does it take to form one? If I go to daily time frame, it means this candle, just one of these candles, it took a whole day for it to form. This big candle now, it took a whole day, including this week here. Okay, it means it took a whole day for it to form, right? Let's go back to our GBP USD. It took a whole day for it to form, right? Then sorry, let me delete some of these things. All right, so it took a whole day for it to form. If you go to 15 minutes, for instance, it means each candle takes 15 minutes to form. So definitely your style of trading will be different. Okay, now as I'm making this video, I'm seeing a very sweet setup on GBP USD. GBP USD is about to sell. Just look at this. So GBP USD is about to sell. It's about to drop crazily. About to drop crazily. Did you see that? This entry was caught on 15 minutes time frame. Trading is as simple as that. How do I know? And let's see how it plays out maybe in a couple of minutes before I finish this video. Let's see how it goes, right? Okay, so what do we look out for? Number one, what's wrong with my mouse? Sorry about that. Okay, back. Number one, we draw out our support and resistance level. Support and resistance simply means the place where the market came to and it could not pass that place. Okay, so support is always below while resistance is always above. Okay, so this will be your resistance and this one will be your support. All right, so let's go on. GBP USD, sorry, okay, so remove drawings. Okay, remember I placed a trade here, and my pips is just very small. Okay, 30 pips stop loss. Don't mind me, I'm doing tutorials, then I'm still looking at the chart. Okay, I'm still looking at the chart. So let's see how it plays out. I can even, okay, let me tighten my stop loss a bit. 28 pips, just above that rejection. Yeah, and target this next. Okay, so support and resistance. Let's start from trend line. When you see your charts, you try to draw a line to pick out different lines. Once you have one or two lines touching, then it's a trend line. When you have one or two lines touching, as you can see in this position now, the market is forming a descending channel. Every time it touches this line, it tends to drop, right? It's not perfect, but I have a few lines that makes it valid. It's not perfect, but I have a few lines you can see it's touching that place too. You see? Alright, so that's an example of a trend line. And remember, this is a very low time frame. Okay, so let me switch to my 4 hours, which is the basic time frame where we catch hours. Clean entries. So the first thing you need to do for me is to determine what kind of trader you are. What kind of trader are you? What kind of trader you want to be? Are you a working class? Do you have things that you do that will take your time? So you need to be a swing trader. But if you have all the time to sit on the charts and monitor your trades per second, per minute, per hour, then you could be a day trader, right? Because day traders simply from the meaning of the day. It means you have to close out your trades in that day. Now, as you are looking at this chart now, what can you see? If I were you, I see a lot of trend lines. Number one, from this place like this. Okay, let me come up a little bit. Okay, these 4 hours. I just want to show you examples of how you pick trend lines. Do you see that? This is a channel. Another example. Let me delete this one. From here to here, you just look for a channel that is moving in a particular direction and then try to join the lines and see what happens. Look at this now. This is a 4-hour time frame. Every time the market gets to that place, it tends to bounce back up, and then at some point it had to break it. Now there's something we call break and retest also. It came to that line, it broke it, came back to test the line, and then it began to drop. And then right about this place, one of the patterns I was about to talk about just got formed. So this is back testing. Okay, this one happened in 2021, I think. 2023, yeah. Yeah, 2023. So let's see what happened. Let's see the pattern. It's called head and shoulder. Inverse head and shoulder, but it did not play out. So maybe I should not use that as an example. Okay, let's keep checking. Okay, I see something like a double top here, but it did not play out, so I'll still leave it. Good. I've seen an example of a market that is ranging. You remember I told you market moves in 3 directions. It either goes up, it goes down, or it goes in sideways movement like this, right? So if it's not going up, it's not going down. It's moving in a sideways direction. So let me just quickly show you what I see. Okay. Where are you? Look at this whole place. The market was not going up, it's not going down. So it's just in this range. It's called ranging market, right? It's just flowing within this range. It's not breaking above, it's not going below. Look at the way this one was. It came down. Now it could not go below this level, and it began to shoot up. At this place, we say there was a break of structure. It came below it, came back to test it. Instead of giving us a new leg, okay, this is what the market is supposed to do. We have what they call a trending market and a ranging market. When the market is trending, it's giving us a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. You see that the new high is always higher than the new one, than the old one, sorry. So it gives us a break of structure, gives us another break of structure here. What does that tell you? That the market is trending. And the best market to trade is a trending market. So first thing you look out for when you open your chart, is this market trending or is it ranging? Is it giving you this vibe that you can now pick out your trend line to join the points? Please practice this thing that I'm showing you right now, okay? Is this market giving you this vibe, or is it just going choppy, just like this example that we just gave here? Okay, so let me illustrate the 3 of them. This is a bullish trending market, sorry. Then let me give you a bearish trending market. It gives you a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low. You see, it's trending, but it's going down. And then you can easily know that this market is going down. You just join your lines. Sorry, it's not as perfect as the other one, you see. And I'll show you how to take advantage of all these trends as it's moving like this, right? Then the last one is the ranging market or the consolidating market. It just keeps going up and down within the same axis, right? Keeps going up and down within the same axis. This one is called a ranging market, as you can see, right? This one is called a ranging market. So all of them you can trade them, but the best to trade are these ones that are just going particular direction. You know where the market is going. So as soon as you spot this, you wait for it to pull back and then you join in the ride. You wait for it to pull back, you join in the ride, and then you can even trade this pullback if you are sure of the time it wants to pull back. You know, I told you that Forex is patience. You see this pullback here, this one is called impulsive move. Never forget, impulsive move. This one is called the corrective move. Where is my marker? Corrective, impulsive, corrective, impulsive, corrective, impulsive. So it is that impulsive move that you always want to catch. Okay, I remember I taught you about stop losses and take profits in our former class, in the video I did last. Okay, so I want to quickly show you how to use that when you are trading. So let me look for a very nice example. This is a trending market, right? This is a trending market. It's shooting up from this point. It began to go up, as we can see. So as it gave us this push, we wait for the pullback to touch this trend line. Okay, and then if you pick these two, they call it long position. If you want to buy, it's called I'm going long. You can say I'm going long. If you want to sell, it's called short position. So this is the icon they use to place that buy position or long position. This one is the sell position or short position. So in here, a trader saying I'm going short, I want to sell. Okay, I'm going long, I want to buy. So let's use the long position. You click it, you drop it in the place where you want to enter the trade, and then you can see I actually made mine black and green. You can actually change it to green and red, which is what most people use. This black area indicates your stop loss. So if the market decides to go against you, it's going to stop you out in that particular position. Okay, and this is where your take profit. So that's how you place it, and then you can see the market just blew up from after it touched this our trend line. It just blew up because it's on a what? It's on a trending market. I'm looking for a very, very good illustration to still show you an example of a very, very good trending market. Trending market. Yes. Look at this, guys. Look at this. From this point to this point. What did you observe? It shoots up, just like impulsive. Sorry, it's not picked. Okay, now you can go. Impulsive, correction, impulsive. All of this is an impulsive move. Then there's a correction move, then an impulsive move. Forget about this noise. Okay, so what do we do now that we know we have a channel? Number two, you can still draw another trend line here. You can see that there's a trend line. Every time the market touches that place, it bounces back. That's why I told you the whole of this place is a channel. Then it comes down, comes down, right? So what do we do? Immediately the market shoots up, it comes down. I'm going to do a separate tutorial on how to use your Fibonacci. That's another way to be sure. Okay, place your Fibonacci on the swing low to the swing high and wait for the market to retrace to your 50% or 61.8% level, this place. That is when you will even know that this market is really ripe for a sell, for a buy. Okay, and then you place your stop loss just below that 61.8 level. You can see there was no drawdown at all. The market just blasted all through our TP. So that's an example of a trending market. Okay, I'll show the example of a ranging market. Guys, look at what I told you. I told you that GBPUSD was about to sell. Look at how it's tanking down, guys. Can you see? Can you see? This was our entry. Can you see? GBPUSD is selling. It's selling. Okay. These are things that we just know. Thank God you saw the way I caught the entry live on video. So I just saw that the market broke below this support and came back to test it, and I knew it's going to drop. And even if I pull out my Fibonacci, you will discover that somewhere in between my 61.8 and 50, this place. Okay, that's how I knew this guy was going to drop, and it's dropping nicely. So that's what knowledge can do, right? Okay. So let's move on. Back to our 4 hours time frame. So we are seeing chart patterns now. Okay, when you open your charts, these are the things that you see. Okay, but your ability to be able to spot them is what gives you the money. Okay, so I want to talk about head and shoulder. I spotted one right about here. How do you know it's a head and shoulder? Very nice question. You know how head and shoulder looks like? Let me use better. Okay, it looks like you see your shoulder like this, then a head, then another shoulder, just the way you are physically, right? So anytime you see this pattern, it's a reversal pattern. You wait for the market to break this place. This place is called the neckline. Let me add, I'm trying to add text or something. Okay, it's called neckline. It's called the neckline, this place. Okay, so this is the shoulder, this is the head, this is the shoulder. You wait for it to break below this neckline, and then you sell down, because it's gonna sell. And that's exactly what played out. Now watch. Let me draw it out for you. This is the head. Okay, this is the shoulder. This is another shoulder. You can see how difficult they can be to spot. But when you have eyes, with time, that's why I always emphasize that you spend time with your charts. Look at the head, look at the shoulder, look at the head, look at the shoulder. Don't worry, there's something I need to show you. You keep seeing them. I've seen another head and shoulder. And that's how you know that the market will continue bleeding down. Okay? I talked to you about support and resistance. Every point the market has gone to react before is a support and resistance. Why is it that every time the market comes to this place, it reacts? It reacted. Did you see it? That is how we get our support. Now look at this one too. Every time the market comes to this point, it reacts. That's how you will spot. So if you're a trader now, as it came to test this place, where bounce back up, as it's approaching this place, what are you supposed to do if you were me? If you're a good trader, you buy. Because you know the market reacts. And you place it on the recent resistance that is above. Did it hit your TP or not? Nicely done. And as soon as it got to that place too, you know it reacted in the past. Anytime it got to this point, you place yourself there and make sure you tighten your stop loss. And then you put it in the previous what? Support, your TP. Did it hit your TP or not? Nicely done. But now, as soon as it broke below it, you know that, man, there's a problem. Then you wait for another formation. But now as it came above, it now gave us a nice head and shoulder. Just like I was saying. It now gave us a nice head and shoulder, right? In this place, head and shoulder. What do? You wait for it to break this neckline. Remember, I just showed you that now. This place is what you see here. What did it do? It broke below it, came back to test it, and it could not close above it. That's to tell you that the market wants to drop. Then it is at this point, that's why I told you Forex is patient. It's at this point you sell and put your stop loss just above the shoulder, this shoulder. Okay? Above this shoulder. And then you allow it to bleed down to the next support. How do you know where to put your TP? Look left. My mentor will always say look left. What do you look at in your left? The recently broken support. Did you see that? So this should have been my TP if I'm not greedy. And did it hit my TP? Nicely done. If you zoom in again, even to this point where we are, I'm talking about head and shoulder now. You will still spot another head and shoulder. If you have eyes, if you have eyes. So that should have told me that this market still wants to continue. You can see that every time the market gets to a place, market moves from zone to zone. It broke below this zone. Remember, it was tested here. That means this place is a zone. It broke below this zone and came back to test it. Look at it. That's the added confirmation. See, it broke below it, came back to test it. Came here, wasted some days here, still went back to test it. As soon as it came back to test it here, this is where I would have entered, gotten my entry. This place. I put my stop loss just here. Look at how it bled down. Right? So we've covered head and shoulder. I told you I don't want this video to be too long. Anytime I spot another example, I'll let you know. I'm just trying to make you be familiar with the charts. Familiarize yourself with the charts. There is nothing too special about the charts. It's just for you to be able to spot that move. Look at this again. Look at this. Look at how the market started bleeding up. Okay, shoot up, came back, shoot up, came back, shoot up, came back. You see that there's a reaction every time it touches your trend line. You are the one that will determine the perfect place for that trend line to be. Okay, you are the one that will always determine that. Let me go to another pair that I know is not common. Let's go to New Zealand, GBP AUD. That one is very, very strange. So there's nothing like USD there. Okay, so let's go to weekly time frame. First of all, let's determine the trend of our market. You can also see that the market has been bleeding down, but something has happened that has refused to give us a new lower low. I told you about lower low, lower highs. Let's go to GBPUSD to explain that once again. I'll be rounding up this tutorial very, very soon. Let me show you lower lows, lower highs, lower lows, lower high. So in an uptrend market, we have higher highs, higher lows. This is higher high, this is higher low, this is higher high, this is higher low. Is high, but it's not as high as this one. That's why we call it higher low, because this low is higher than this low. So this is higher high, it's higher than this high. Why this low is lower than this low? So we say higher high, higher low, higher high, higher low, higher high. So in the market where you see a series of higher high, higher lows, it means that the market is what? It's trending up. While when you see lower highs, lower lows, lower high, lower low, this low is lower than this low. Okay, so lower high, this lower high is lower than this one. It means the market is going down. So first thing you need to determine what kind of market structure are you looking at. Okay, what is the market telling you when you do your analysis before you even know how to enter your market? Remember, I told you to always use higher time frames to get your entries. Always use higher time frames to get your entries. And you see that GBPUSD is tanking down. Knowledge is the key, my people. Knowledge. This thing called knowledge is the key. If I had used a big lot size now, not just that I'm actually doing a live video, I would have made like a couple of bucks from this trade already, right? So it's as simple as that. You can see how I predicted it, and it's going just like that. Okay, there is nothing to be ashamed of. When you know it, you know it. It's just the skill, right? So we'll see double top, double bottoms. When you see those ones are M shapes, you see them M or W. This is a double bottom. Anytime you see it's a reversal pattern, it means the market wants to reverse. And when you see the inverse, which is the M pattern, it means the market too wants to reverse to the downside, right? And then there are many examples of those on the chart. When you look at them, the charts, you will definitely see them there. But just for educational purposes, I've seen one, I've seen two. So I'll just show you quickly. For instance, this market was coming down. It came to this point and could not go lower than this, right? It shoots up to form the center of the W, and then came back to give us another at the same level. And you can see it's a very significant level because it has been tested multiple times in the past, right? You can see it has been tested. If you zoom to the past, you will see it tested, and then at this point gave us a nice W. One leg, two leg, three leg, four leg. And this is so perfect because it even came back to test the neckline. The neckline of this W is where you buy. So this is where my entry will have been if I spotted this. Okay, this is where my entry will have been. And then you target the next support. At this point, all these places has not been formed. So you don't know where your take profit will be. What will help you is to check the next available support just above that place where you entered. And as you can see, this is my next support level. Okay, so all you need to do is to what? All you need to do is to push and this is where my TP will have been. Look at how the market blasted through. So this is a nice W pattern or double bottom, right? You keep seeing them all around the chart. I saw something like a double top here too, and it takes eyes to see it. Okay, I'm just showing this example so that when you see, then you begin to practice. Can you see that? So the market came and could not break above this place, and it came back again to retest it and gave us a nice wick rejections. In Forex, when you see candles having this long wick, it shows that people, if it's on a on a bullish trend, on an uptrend, and you see that wick from top, it means that the sellers are pushing the price, and there is tendencies that the market will sell. So wick reject. To study your candlesticks, I'm going to do a separate tutorials on candlesticks, Fibonacci, and then probably entry and exit. I've touched entry and exit. I've showed you how to exit in your next support or your next resistance, depending on if you are buying or selling, right? So this is how the market played out. And as you can see, this one, there was no retest of the neckline. There was no retest. It just formed the M pattern and then it bled down. So what will you have done? This is where I will have bought, put my stop loss above that high and targeted the next support. Which support can you see? Right here. This is my next support. And as God will have it, it broke right into, in fact, I think this was even the news because the candle is so strong. My God, look at the way it just broke down neatly and kissed our TP, right? So that's an example of double top. I've shown you double top, double bottom. Which other one? Okay, so that this video will not be too long, let me end this, then I'll take the next subject which I think is very, very important to you guys. So thanks and have a wonderful day.